Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Alphabet. So Alphabet reported their results last night, Q3 21, and I'm just going to talk through that. I'm going to talk about it was a very strong quarter for Alphabet, and I'm going to talk about its prospects over the near term. I'm going to talk about why the share price hasn't really gone anywhere, but ultimately why I believe that this stock is quite attractively priced at 6 times forward sales. So here's the thing, right? So it was a very, very strong quarter for Alphabet. They really kind of managed to plow forward and grew their top line at 41% year over year. So this is something that obviously is quite impressive in and of itself, because Alphabet's quite an old company. But we're talking about 60 billion in revenue. So if you think about it, I mean, it's difficult to grow at, like, let's say at $1 billion of revenue at 40%. It's difficult. But 60 billion, I mean, it's just like poof, it's just like out of this world. So I think that this is quite impressive. And if you think about it, right, so it wasn't even like the Q2 period where they had easy comps with the previous Q2 in the COVID period. So we're talking about against Q3, which was a moderate quarter. You can see there the top line was up 14% year over year in Q3 2020. So it was not an easy comp necessarily, but to come out of that and to comp against that at 41%, I think this is quite attractive. The other thing that I wanted to highlight is that this is like kind of putting it out to you guys. The company grew very rapidly and it put out 32% operating margins. This is GAAP, clean, including stock-based compensation operating margin. So I follow a lot of companies. I don't know many companies that are growing at this pace and as profitable as this. I know many companies that are growing very, very fast and highly unprofitable. Yeah, I know loads of those. However, I know companies that are growing quite slowly and make a lot of GAAP profitability. But to be able to grow at a multi-billion space and to be as profitable as this, I think this is quite attractive. Obviously, on that basis, you can see that the free cash flow margin was 29%, so that's quite attractive. The one thing that I will highlight is that a portion of this was down to the change in the useful life of the data centers. This is going to kind of reverse very slightly into Q4, but as I highlighted already, I gave you the free cash flow margin 29%. So, this is like, it's cash, you can touch it. So it's, it's a business that's doing all the right things. So yet the share price hasn't barely moved. So why is that? So one of the things I want to highlight is Google Cloud has been the narrative has been kind of put out there for the next leg of the growth rate, and because it was diversified away from the core business, and it's not really like that impressive. So it was up approximately 44% year over year, so that's strong, right? But if you think about it, let's just put out and compare with Azure. So Azure reported last night too, and they were up 51%. So Azure is obviously much bigger than Google Cloud. So even though it's a much bigger platform, it's still growing faster than Google Cloud. The next thing I wanted to highlight is that AWS, they haven't reported yet, they're going to report later this week, but AWS's profit margins are 29%. So you got a business which is AWS is the biggest cloud platform out there, grew at 37% last quarter and highly profitable. So if you remember, that's really what's been driving Amazon for so many years, that funding of AWS being plowed back into the business, and that's allowed this retail business to continue to just grow at a rapid rate. So with that in mind, I think it's quite interesting that investors kind of left wanting. Look here, so Google Cloud is kind of moving the profitability in the right direction, but it's still not profitable. I mean, it's difficult to kind of get really behind this, because this has been one of the things that investors have been put out as like the next needle mover for Alphabet. Transpires that it's not quite doing that as well as many people felt. The other thing that I want to highlight is that when it comes down to it, everything is really contingent on the advertising business. So on that basis, it's priced at 6 times forward sales. Now I just wanted to highlight the big topic from last week. So last week, Snap reported their results, and they kind of did this whole privacy issue had affected marginally its guidance, and the stock just plummeted. So investors were like, oh my god, this privacy issue thing is a real serious thing. So investors kind of got spooked on that. So when the results from Alphabet came out and they're quite strong, and everyone's like, okay, actually privacy is not such a big thing. They do note on the call that privacy affects desktop, particularly within the YouTube segment, but it's not clearly not being affected that much. The other thing that I want to highlight is that Snap is a great company. I like Snap a lot. I don't own any of these companies, but Snap is priced at approximately 16, 17 times forward sales, and Alphabet is priced at approximately 6 times. So is it really that Snap should be priced at, like, let's say, triple the premium to Alphabet? It's kind of difficult to make that case. But I mean, Snap is great and all that, but appears to me, on the surface at least, that Alphabet is particularly cheaply valued. One of the things that's been hanging over the stock for some time is this whole regulatory landscape. How is it going to happen with the spin-off? Is they going to be broken up? Are they not? And think about this logically. You have this huge conglomerate, and you take an investment in it, and if things stay as they are, you have a highly innovative team driving this business forward. If things split up, you probably get YouTube as a separate business. Is that such a big problem? You hold on to those shares? I mean, YouTube is just like, it's untouchable. They have such a large offering, and they just hitting so many users around the globe on a daily basis. It's just difficult to kind of dislodge that. I know that TikTok is doing their thing, and Snap is doing their thing, and Facebook Reels is doing their thing, but when it comes to it, I think that YouTube is like one of the biggest platforms out there for video. So anyway, I think that there are always some uncertainties facing any business, but I think that this is kind of just too much uncertainty being priced in. Anyway, I'm not invested here because I like to invest in small cap stocks, and if you want to find out what kind of stocks I'm interested in, don't forget to check out my marketplace called Deep Value Returns. I help you become a better investor. I help you think through your process of building your portfolio and growing your portfolio at a reasonable rate. Okay, everyone.